In real estate, one of the most important decisions an investor makes is not what to buy, but where to buy. Location determines demand, location determines price, and over time, location determines profit. Today, we are not just talking about it, we are driving through it. From the established strength of Kampala to the fast expanding frontier of Wakiso district, 2 markets, 2 realities, 1 big investor question. Let's take the road and see what the numbers don't always show. Kampala remains Uganda's most commercial and administrative heart. This is where the banks are, the ministries, and the corporate headquarters. For investors, Kampala offers immediate rental demand, strong commercial activity, and prestige addresses. Kampala offers certainty, but you pay for it upfront. And here he is, Moses Lutalo, the Managing Director of Broll Uganda. Moses, always a pleasure to have you in this room.
Thank you.
You're welcome. So we said, instead of sitting in studio, let's drive through the investment zones themselves. Please come with us. Moses, let's talk rental yields. Where are they currently stronger, Wakiso or Kampala?
Of course, when you talk about rental yields, every time you talk about a risky neighborhood, it means the rental yields are better. And I want to explain this on an example. If you have tenements in Wakiso, someplace in Nalia or Chiwatule, you're likely to get a higher rental yield than you get in Kololo from a residential.
Really?
Commercial. Yes, because it's a more risky investment. Yeah. So you find that, for example, if I got, I put up a development and I'm getting $1 million shillings in Wakiso, I might be getting a higher return on that investment compared to what I'm getting in Kololo. But the difference is that Kololo might be a more stable market and I'm likely to sustain that tenant for a very long time than that one Wakiso who will be moving out every 3 months and get a new tenant. So that impacts. But if you look at the prime real estate, rental yields in residential are averaging between 6 to 7%. Those are the strong markets. Kololo, Nakasero, Naguru, those are really strong markets. Commercial is maybe between 8 10% commercial property. Now you find that when you go into now Wakiso and look at some of these, shopping centers that are coming up or small
neighborhood
malls that are coming, or even small apartments of 800,000 per month, you find that if the cost was optimized, the yields might be better because you find that they're not even maintaining them, so the net operating income is higher than what you'll be getting out of your prime property where you have to pay taxes, because
maintenance costs, the quality of tenants.
Exactly,
demand.
So the net operating income for that particular property might be higher compared to one in Kololo because the other one in Kololo is well structured. The demand for good services is higher than what you'd have in Wakiso. But now it boils down to risk. So if I'm going to invest in Wakiso, my expectation is maybe 15% return I'm looking for. But if I'm investing in Kololo, I might accept 9% because I know it's more. Because remember, at the end of the day, when you're looking at these investments, what a typical investor is looking out for is not to introduce volatility into their returns. They want to see sustainable returns. I'd rather get 9% over 7-10 years than getting 15, then 2. So the moment you introduce that volatility, it becomes highly risky for any investor.
If you had 500 million shillings today, how would you allocate it between Kampala and Wakiso, and why?
Wow, 500 million. I wouldn't even look at Kololo or Kampala with 500 million. And the reason is the entry price, whether you're buying an apartment in Kololo or a piece of land, might be way, way far ahead of that. But why I would consider Wakiso, because maybe in 500 million, I would be able to afford an acre of land, which I can service and sell, service plots. and be able to generate a return north of 20-25%, which I can reinvest to grow that.
What is the biggest mistake new property investors are making right now?
Wow, that's a big one and almost straightforward. I think a lot of the investors here, they have I know it all syndrome and they want to assume what they've done or what someone has done will work for them. So in that regard, they don't speak to professionals, they want to cut corners, and eventually we've seen a lot of them come to pay back after the project's up. And it's very costly when you've built a project which is not viable. Because one or the other professions have to get involved.
That's true.
The question is, you want them involved from day one. They might be cheaper when they're involved from day one than when you bring someone to do for a structure design for a building that is already built and is already having structural defects.
From the established core of Kampala to the expanding frontier of Wakiso, the choice is not just about geography, it's about strategy. Understanding risk, understanding timing, and understanding where development is going next. This is Property 360.